going to cover undeposited funds. So I think if you are doing the books on QuickBooks, you might have heard the undeposited funds while doing the accounting. So this is basically nothing but just a clearing account, or just understand this like a virtual cash drawer that you have. So what is virtual cash drawer? It means that you got a money from the customer and it is being put into the virtual cash drawer and you did not receive in your bank account yet. So this is somewhere between the customer and you. So it's sitting in between both of you. So that's why we'll call it as a virtual cash drawer at this point. And that is what the undeposited funds are. So what we are doing is, and many of our clients where we are doing the AR accounting, they actually want us to use that undeposited funds because they want to keep a track of how much AR is actually outstanding. So I'll give you an example. We have 100 customers, right? And each one of those customers gets to, we are emailing them that you are not paying us, please pay us, we'll stop your contract and all those things. But what if one customer pays you on Friday and it does not come to you until Tuesday because of the holiday or the weekends, and you still go ahead and send an email to them on Monday and Tuesday as well that why didn't you pay? Then client will say that I have already paid to you, and it will look really bad on us that they've actually made a payment but still we did not record it. Now how we are going to record if you don't see the payment in our bank account? If you do that, then it will be overstating your cash and understating your account receivable. But that is a way that we will be using the undeposited funds for. So this is basically a clearing account where we are reducing your account receivable, but we are not increasing the cash yet. The cash will only be increased once we actually have the money in the bank account. Okay. So now I'll explain it with the way of journal entry, so you know how this also works. So for example, you made a sale of 100 rupees or $100. So the accounting entry we'll be doing is account receivable to sales. Okay. Now you got, and it's done on 1/1/26. You got a notification from client that they have actually processed a payment for you on 1/2/26. Okay. On the 2nd January, they sent an email to you. Okay, they have processed the payment. So what you are going to do is, we are going to, because that this is already being paid, this is no longer AR. So what we will do is undeposited funds. Account receivable. So what it's doing in here is, it will reduce your AR. So your AR is now 0, and now you have a balance sitting in the undeposited funds. So it just literally replaced the undeposited fund for a period of time. So now when you went into the bank and you see on 1/3/2026, you see that the deposit actually hit your bank account. So what will happen is, the bank will now increase by 100 rupees, but you don't have an AR to match it up. You don't have to book it directly as an income because this is against an invoice for which you already recognize that as an income. So you are going to match this with this undeposited fund account. So the moment you match it, what will happen is, this will be 0 out. So the entry will be done is, whenever we receive money, the bank gets debited and then undeposited funds will be credited. So then here is the debit, here is the credit. So this gets nullified. Ultimately, entry you are doing is bank account debit to sales, because AR gets zeroed out, the undeposited funds here gets zeroed out, and then the net entry is bank account debit to sales. So you made a sales, you got the money. So that's the whole way of how we are using undeposited funds. How to do it in QuickBooks? Whenever you see an invoice for which you want to create undeposited funds, you will go into that invoice. It will show you as an option of receive payment. So when you click on the receive payment, it will ask you to select the invoice, select the date of payment on which you think that it will get credited to you based on the notification or the email or whatever the communication that you receive from your customer, and then book it in that. Okay, the moment you create the receive payment, submit it, it will create an undeposited fund balance in your balance sheet. So when you go into your balance sheet, your AR will be 0 and your undeposited funds will be up by the $100. The moment you see the bank feed, it will automatically show you to match. So but you need to be very careful. If you are only doing one, that's fine. But if you are doing 100 of it, you need to make sure that you are matching to the correct account. Okay, so that is what the undeposited funds are, and it's just a clearing account. You don't need to be like reconciling this. Every month you need to just make sure that whatever fund is in the undeposited funds you need to make sure that this is actually getting cleared in the next couple of days. It should not be like you created the undeposited funds today and then for a month it's sitting in them. It doesn't make sense, right? If you haven't received the funds in a couple of days or 3 days or 4 days, it doesn't make sense to actually use the undeposited funds. It means that you are actually created something but you did not receive the funds yet. So for example, if customer actually sends you a notification they actually paid, but what if the payment gets rejected? Right? What will happen? Because you already created the undeposited funds and based on the initial notification, but after 3 days or 4 days you don't get the money. So what will happen is you actually need to delete that undeposited fund transaction. There is no other way to actually adjust it. I'll rather want to delete that transaction altogether. So how we will be doing it? So same way, when you go to the invoice, that invoice will be now showing as a mark as paid because you created that undeposited funds. Now go into that invoice, you will see the link of payment there. Click on that link, which is basically a receive payment entry that you already did, and just delete it. So that way the invoice will again be open. Your account receivable will be again up by that number. Okay, so this is the undeposited funds we are using. Any question?